So out of all the commodities, crude oil is the mother of all commodities, and we have to learn about few basic things about the crude oil before we dive, take a dive into the technical setups. So the way I have structured the session is that the first 40 minutes I would like to discuss a little bit background of the crude oil, which is very essential for us to know. And without going into that, it is not possible for us to trade crude oil effectively. So some bit of fundamental knowledge is required. So I will do it for next 30-40 minutes. And then I have three setups, as I promised, two technical setups based on two different time frame that will take another hour or so, and the inventory play, it will take another 30-40 minutes. Okay, so, or sorry, 10 to 20 minutes. So we will be left with around 40 minutes towards the end, which I will take as many questions possible. I will try to take questions in and when I go along with the session also, but the bulk of the questions will be towards the end. So I will request all of you to actually limit the questions for the first couple of hours at least, and because towards the end we will try to attend as many questions possible, and if it is required we can extend the session by 10 or 15 minutes also, the questions are left. So first, please listen to me and then we will move ahead. So I gave you the structure of the session. So all of us good to go right now? If yes, you can start. Give a why, and then we can start. Great, great. So let me tell you that what we are going to trade. We are going to trade this crude oil futures contract. This is the MCX crude oil. Okay. Now you have to understand one very important thing, that crude oil is that crude oil that we trade is the rupee dollar converted price of the global crude oil, or the WTI crude oil. There are many types of crude oil benchmarks. One of them is that West Texas Instrument, that is intermediate, West Texas Intermediate, and this is the WTI crude. And once we convert it into a rupee dollar formation, what we get is the crude oil that we get. But there is a catch. Look at here. First, I am looking at the Indian market. When is the first 10-minute candle? At 9 a.m. When is the last candle? It is 2350. It ends at 11:55. So between 9 to 11:55, we are trading almost 15 hours, okay, or 14 hours 55 minutes. But if I talk about the global crude oil, you can see the first candle, uh, of any day is starting at 4:30 in the morning, right? So we are opening in the morning at 4:30, and we are ending the day at 3:20. So it goes 10 more minutes. So it is 23 hours. So one thing is clear, that what we are trading right now is rupee dollar converted price of the crude oil. This is the global crude oil. It is denoted by CL1. See, NYMEX listed crude oil, and this is NYMEX traded, and this is MCX traded that we are having, the one. So rupee dollar converted price only. See, this is the MCX crude oil. Now what happens is that because our market closes at this point of time, uh, that is 2350, right? So our market will close at this point of time, right? So this was around this time our market closes 2350. This is 00. So this is the candle where our market closes. Now, next day our market opens at 9 here. So in between the time when our market is closed, that MCX market is closed, crude oil moves this much. This is a quite a move, and on a daily basis you will find either gap up or gap down. See, the previous day there were gap down. Okay, the previous day there were gap up. So every day you will see the gap up and gap down thing happening in the crude oil. Why? Because this is the time when our market is closed, but the global crude oil, that is the US listed WTI crude oil, moves, and accordingly we open at whatever price, that is the time, and that time there is, we open at that time. See, after that the movement is in sync uh, with the movement that happens in this. See, these stops, and then this pullback, then this pullback, and then we close somewhere here, and after that also we, it continues to trade till 3:30. So you have to understand that our market closes a little bit early, so that is why there is always a risk of a gap up and gap down, and that is why we don't trade crude oil in general on an overnight basis. All of our trading in crude oil is mainly intraday basis. Actually, to talk about myself, my 99% of the trade would be on an intraday basis. And we will learn about the futures trading of crude oil in this session. We are not going to discuss about any of the option trades, because option is a completely different arena. We will be only discussing about the trading the crude oil future. Now, in a crude oil future that we have in India, if I search the MCX crude oil, okay, so I will go to the contract and I'm opening the futures contract. Okay, so the latest contract, it keeps on changing. So from January 2022, you can see the latest contract. Now, this crude oil contract has 100 barrels and price change is 1 rupee. That, what is it saying? It is saying that when I'm looking at the price will move 1 rupee, like, and this is a 100 barrel lot, so 1 rupee per barrel. So suppose from the movement is 1 rupee, so our PNL will get affected by 100 rupees. So if it moves by 10 rupees, our PNL will affected by 1000 rupees. 10 into 100, that is 1000 rupees. Another very important point that I want to make you here is, because our chart is incomplete, all of you agree that our chart is incomplete, because we are not trading certain amount of time and opening uh, gap up and gap down on a daily basis. So our chart is incomplete, that all of you agree? Yes, because our chart is incomplete, so all the technical parameters that will be based on the our chart are invalid. Our charts are invalid. So what we do, basically what we do is that we look at the primarily the light crude oil chart, that is the CL chart, and you then trade it. This is the trading view. I have taken the two window setup. In one I have put the MCS crude oil, and in the right I have put the NYMEX crude oil. So what we do, that we look generally, we will look at the chart of this crude oil, that is the US crude oil, and our take our trading decision or our parameters based on this only, because this chart is primarily incomplete. The close is not the same. So almost every indicator is takes the closing price. So because the closing price is not the same, so all the indicators are actually distorted and in Indian chart. Now let us discuss one more important point. See, uh, of all the commodities that you trade, the crude oil is the most liquid. So I have done one thing. I have put the future commodity and top five. If I don't select anyone all, if I select the top five commodity traded, you will see that the highest volume is in the front month of the crude oil, and uh, others are quite lower volume like silver, nickel, gold. So all these are future com. All these are having much smaller volume compared to the volume of the crude oil. So it is very liquid. In every price, you generally get a buyer or a seller. And generally, because last day you saw that uh, this last contract expire. So generally, you will see more than one contract. So if I only limit to crude oil, you will generally see the two crude oil contracts, one expiring on 18th of February and another expiring on 21st of March. Now, tell me a simple thing. If what are you experienced with? If you go to the nsc.com and if you going to the old site, if you go to the Nifty contract, suppose equity derivative, okay, if I'm going to the Nifty contract, so this is the Nifty contract that we will get. So index future, you can see the Nifty. I'm choosing 27th Jan. So you can see that the future is like this. Now, if I choose, it is not allowing me to choose the next contract, but all of you know, if you want to choose the contract of the February expiry, will the February expiry price be higher or lower? In general, those all who are in trading in the market, what we will find? Will the January future value be higher or the February future value be higher? Which one? January or February? February will be higher. So that is, so all of you agreeing that Feb will be higher. But look at the crude oil. This is the February contract. This is the March contract. So LTP of the February contract is 6313 and LTP of the March contract is 6275. Do you see a complete opposite thing? March is lower. March is lower. So are you surprised a bit? Are you surprised a bit? Do you have an idea that does it happen every time? Let me explain you. See, this is called a, this is a very important aspect of crude oil trading that I want to clear very future. See, like in India, you are seeing only 2 months, but in USA, what happens is they trade the futures of next 10 months, 10 years. So from this month, this month, this month, this month, this month, this month. So they trade till 10 years future. So right now we are in Feb 2022. So they will be trading the Feb 2032 also. So there is this trade happens. Now, in the case when this month future is higher, next month future is lower, next month future is even lower, next month future is even lower, next month future is even lower, and similarly 10 years future is here. We can form a graph like this where near month future are higher. Here I can see only for 2 months, but if I open the US thing, I will get a this kind of a curve. This is called backwardation. I'm writing the thing. You just note it down. Backwardation. Sorry. This is called backwardation. Now, when commodities have this kind of a forward curve structure, this is the forward curve for next 10 years. So when any commodity has this kind of backwardation or forward curve structure, this is called backwardation. So where the recent month demand is high, मतलब what people are thinking that आगे तो कैसे जुगाड़ लेंगे, but अभी demand इतना ज्यादा है, supply इतना ज्यादा नहीं है. At this point, the demand is quite high, but the supply is not that much. So present price is higher, and people are thinking that when we will reach after 4 year, 5 year, the prices will be lower. So immediate demand is high. So that is the time when the forward curve structure is in backwardation, we get a very bullish market. And generally all the commodities, when the forward curve is in backwardation, they continue to move on the upside. You cannot check about backwardation from any tool. It is visible only in the Bloomberg or Reuters. What uh, uh, what you can do is that this backwardation, because you cannot look at the forward curve chart anywhere, but what you can do, you can go to the MCX and find at least 2 months figure to find it is backwardation. And every now and then what I do is that every month I I try to find out if there is any article on this. And I always do in the tools uh, anytime is past month. So if I find any news article on backwardation, so uh, oil up on bullish, increasingly bullish backwardation pattern. So when oil up on bullish backwardation pattern, because we cannot subscribe to Bloomberg and Reuters, we should always keep on searching for this backwardation. And if there is backwardation, we have to be in general fundamentally be bullish on the market. Now this is not always the case. Like when crude is or any commodity is bearish, you will have a different scenario. What kind of a scenario? You will have this month price low, like what is happening in Nifty. Next month price is here, next month price is here, next month price is here, and maybe 10 here away price is this. So in that case, you have a curve like this. This curve is bearish. When the forward curve structure is like this, then the market is in a bearish mode. We cannot subscribe to Bloomberg because it is very expensive, sir. It is almost 12 lakh, 14 lakh per year for Bloomberg. It is not possible for retail guys to subscribe to Bloomberg. Obviously, if you have the money, Samihan Kulkarni ji, you can do, but you cannot actually do this if you are don't have that much amount of money. And I don't know anybody retail who are doing it in India. Maybe hardly 80 to 100 Bloomberg connections there, or maximum 200, and all of them are done by institutions. Okay, so it is not. What was the second name along the Bloomberg that you? Bloomberg and Reuters, sir. Reuters. Ravi Kanji, it is Reuters. Now it can be that second month price is higher than the first month, that is happening in the Nifty. So in that case, if the next month price and next consecutive month prices are trading higher than the present month, that is called the contango. That is called the contango. So what is contango? When the future month's prices, the future month prices are on the higher side compared to the near months. So the first month is called front month, and the future, this is the second month, this is the third month, accordingly. So when the future month prices are lower than the present, it is called backwardation. It is highly bullish for the market. And when future months prices are higher than the present month, it is called contango, and it is highly a bearish situation in the market. So always, and this curve structure changes once in 3 4 years. So but you will get this kind of headlines that if the backwardation is becoming increasingly bullish backwardation, What is increasingly pulling backwardation? So this is the backwardation curve. Suppose what happens, the curve becomes steeper like this. All of you agree the second curve that I drawn is steeper than the first curve? All of you agree that the second month, all of you agree this curve that I have drawn of backwardation is steeper than the first one? So what they are saying, that increasingly backwardation, increasingly bullish backwardation is happening. That means the curves are becoming steeper. So this is becoming steeper. So when curves will becoming steeper, what will happen to the price? What will happen to the price? Tell me. If it becomes steeper, it will become more bullish. It is becoming more bullish, right? All of you agree? And when it will happen that we are in a contango, why present price would be lower? Why present price would be lower? Think logically. The present price is lower only because there is not effective demand. So that is bearish. And if suppose the curve become like this contango curve, it becomes more bearish. Yes, Sapnilji has said right. It becomes more bearish. It becomes more bearish. So contango is a situation where the present month future prices are low and the increasingly in the future months prices become higher. Correct. So these were two important points. So now we will again move to, these are the points that we have to generally search in Google and find. Now let us move to the slide show, and we will very quickly for next 25 minutes to 30 minutes try to finish all about the fundamentals. We won't go very deep into the fundamental, but we will try to know little bit about the fundamental, and then we dive deep into the trades which are in the technical setups. Okay, so let us start. So fundamental, brief essentials, and then technicals. Okay. So so what we will learn? We will learn about types of energy commodities, not very significant. What is crude oil? That is important. Different kind of crude oils, that will important. Crack margin, we will learn. Different crude benchmarks, that will learn. Major producers and consumer of crude oil, important. Crude demand drivers, crude supply drivers, seasonality, OPEC is very important. Important periodic data points, inventory play, trading strategy, technicals. These are the things we will learn. Now there are a lot of energy commodities. I'm just sharing this chart as for your reference. We will deal with crude oil. Okay, so let us move to the next slide. So what is crude oil? Crude oil is like all the plants and all the old animals which existed on the earth millions of years ago. Once they got buried on the earth, their body transformed into some hydrocarbon, which are some sticky black colored hydrocarbon, which those are called unrefined petroleum product or crude oil. Okay, so it is a non-renewable resource. We cannot renew the crude oil, anything. And the crude oil market overall is driven by the consumers, the physical players, the derivative traders, transporter, all these things. Okay, so all these things we will touch base very in a little way. Now the earth has a crude oil, the crude oil so much that has been recovered, almost 53 years of future consumption at present rate of production. So at present rate we are consuming almost 100 million barrel per day. At present rate of consumption there is 53 years of crude oil. Actually we won't be consuming crude oil maybe after 20 or 25 years. There will be alternative sources of most of the things, and that's how our crude oil may, the remaining that 30-40 years of crude oil that will be there and more discoveries will come, may last for next 300-400 years. So because the solar and electric vehicles will come into play, but for next 15 to 20 years crude oil is here to be a main still main avenue for transport. Okay. Now this is very important that you have to understand. Okay. The term sweet and sour is just generally the sulfur content. So if their sulfur content is less than 0.5% of the crude oil, it is called a sweet crude. And if the crude oil is greater 0.5, it is called sour crude. Now, what is why sweet and sour? Sweet takes much less effort to refine, but a sour crude would take much more effort to refine. Okay. Then is light and heavy crude. It is very simple. If the hydrocarbon chains are lower, let us smaller hydrocarbon chains, it is called lighter crude. And again, if the hydrocarbon chains are of higher chain of 30, 40 carbon, they are called a heavier crude. Now tell me which one will take, a commonsensical question, which one will take less effort if the carbon chain is on the lower or the carbon chain is higher? Which will take less effort? Tell me, which will take the less effort? Lighter. So ideally, lighter crude oil. If PPT you will get, Ganeshji, don't worry. So the lighter crude oil is processed much more easily, and the sweeter crude oil is processed much more easily. So ideally, light and sweet should have more price than the heavy and sour crude oil. All of you agree? All of you agree? All of you agree? Now, please understand, light sweet crude is mainly produced in North America, that is USA and Canada. USA and Canada. Okay. And the heavier crude is produced everywhere in India, in the Middle East, in all the countries in the Europe. You will get more of a heavy and sour crude. Light and sweet crude is generally produced in the USA, and it should be priced higher. But what we get here is, I'm coming here in the chart. What we get here is, I will show you. See, this is the, let me go to investing.com, not here. Okay. Now, I'm opening the investing.com. I am going to the commodities. And now, as I said, the US crude oil is WTI crude oil, and the Brent crude oil is the European crude oil. And there are hundreds of benchmarks, but there are mainly three benchmarks. One is US based, light sweet, one is the European based, and another is Dubai based, Dubai benchmark. Now, out of all these three benchmarks, ideally this should be the highest, and Brent and Dubai almost are similar. So that's why they don't show the, for the heavy and sour, the Brent, that's why they don't show Dubai, because Brent and Dubai almost trade at same price. This is light crude of American oil. This is called the Brent oil, which is heavy and sour. Ideally, this price should be much lower than this, but in practice, this price is higher. This is an anomaly. MCX follows WTI. I said in the beginning, Hanshamji. MCX follows WTI only. Okay. So ideally, Brent should be priced lower, and crude should be. So here, why is this anomaly? I am going to explain. Okay. Now, let me go to the slide, because in the next slide I explain this in a very detailed way. Okay. So this is the light and heavy crude. Okay. Now, one important thing that you should understand, that crude oil we don't use in. Why the price is higher? Why the price is not easy to process? Why the price is not high? I am coming to that, Shankadeep Royji. Please wait. What I was telling here is that, see, what we produce out of crude oil? We produce the diesel and the diesel and we produce the petrol and kerosene and the jet fuels. Okay, so crude oil is refined. Now, in earlier times, crude oil refineries were mostly based on USA and America. Now, what happened right now in modern days, the best of the refineries are being built in India, in South Korea, and in the Saudi Arabia. And why they are being built? Because they are more modern and they can take the worst grade of crude oil and produce the best crude oil, the best output. So that is why they are more modern. Now, what is the crack margin? Crack margin is the difference between the product and the crude oil. So what price would be higher, the crude oil or the gasoline or petrol that is coming out of it? Tell me. Gasoline is nothing but petrol. The gasoline should be higher, the diesel should be higher than the crude oil because it is the output. So the difference between them is called the the crack margin. And I will show you the crude oil price generally follows the crack margin. See, when the crack margins were higher, what happened? The crude oil prices were higher. Now, once the crack margin started falling, see, crude oil later, crack margin has started falling much earlier. Crude oil falls from level of 100 to almost 50, 54. So always, again, you cannot check the crack margin anywhere. So what I do is that I continuously keep on checking about the crack margin. So crude oil, gasoline, crack margin trend. So once I go there and I go to the news and I go again, I use the tools and I will see last month. So once in a month I will check that how the crack margins are behaving. Okay, so once I see, there will be articles like this. So once you read that article, you know how the crack margins are derived and why you are doing a fundamental idea about present trend of crude oil. If the crack margins, that is the difference between output and crude oil, is actually going up. So if the refining margin is going up, what will happen? If the refining margin is going up, there will be demand for crude. Every refiner will try to take crude and produce because the margins are going higher. So refiners will try to take crude and refine it to output product. If the crack margins are dropping, what will happen? There will be more demand from crude because refining crude is not a good business. So the crack margins will give you early indication of the market. Okay, this is one thing. Now, as I said you, there are WTI, Brent, and Dubai, three kind of grades. Mainly three kind of grades. WTI is of USA. This Brent is of the Europe, Northern Europe, and Middle East is the Dubai grade. These are the three. Now, these, as you can see, as I told you, Brent and Dubai, you can see almost move together, and WTI moves a little bit lower. Now comes to the point why, in spite of being a superior grade, this WTI trades at lower. Now understand. See, all of you know where did the first set of oils were discovered in initial phases. Now oil is being discovered in all the parts of the world, USA, America, Asia. But what was the initial region where the oil were discovered? Can anyone say me? Can anyone tell? Can anyone tell? What was the region where it was? The US was the first recovered, but in bulk quantity, it was in the Arab countries, not in only in the Arab countries, in the Persian country, that is the Iran also. So in the Middle East region, the oil was discovered in bulk. So what happened after that is that all the refining capacity, if you can see, all the refining, these are these are the drilling permits, but these are the refining station. So all the in the US was the one of the major countries to first set up refineries. And you can see all the refineries are majorly situated in the coastal region. And why coastal region? Because the water transportation cost from Middle East was much lower. Now, whatever crude oil right now is produced in USA, where is it produced? Where is it produced? Where is it produced? In the USA, this is the map of USA. Now tell me where it is produced. It is in the middle of the country. It is in the middle of the country. It is in the middle of a country. So how to transport it? How to transport it? You cannot transport it through ship in the inland. Yes, right. Rohit Joshi ji is saying it is transported through pipeline. Srikant Rathi say, not road. It is transported through pipeline. Now, setting up pipeline for miles after mile, 1,000 miles, this is a very expensive proposition, and pipelines cannot be very thick. You can understand, and there is a maintenance cost, there is a guarding cost, there is a safety cost, everything associated to this. And compared to that, putting oil in a big tanker and transporting through air, transporting through water is much cheaper. Because of this transportation cost, in spite of this crude being a very superior crude, no one wants this crude, because to take this crude there has to be transported through inland, and that is why, though this is a superior crude, the crude price is low because the transportation cost the refiner has to bear. So that is why what happens, this crude is traded at a lower value. This crude is traded at a lower value because the Brent crude, though uh, it is near getting out of Middle East, it is very easy to transport. If I show you the world map here, world map, if I go to the world map, I'm going to the map. Now see, it is very easy to take oil and go through the ocean and here, because transportation in globally, the transportation through this ocean is very cheap. But this much distance having physical pipeline is very expensive. Now all of you understand that why WTI, in spite of being a superior crude, is actually trading at a lower price. All of you understand this? All of you understand? Very important aspect. Understand all of you? Yeah, great. Now let me go back. Now one thing let me tell you, see, crude oil is not like a component like paddy. Crude oil is not a component like paddy or wheat or steel. Suppose this year a lot of paddy is produced, what will happen? Tell me. A lot of steel is produced this year. What will happen? If there is no buyer in the market for the steel, what will happen? Drop in price, but what will happen to the commodity? What will happen to the commodity? What will happen to the commodity? No, the commodity won't be damaged. It will be stored, right, Srikanji? Exactly, Ramkrishnaji. It will be stored, because storing a wheat or paddy, you can, if you put preservative, or if you are producing a lot of some kind of metal, you can store it. It is not destroyed. Shelf life is of paddy is short, but still at least 2-3 years it can. These are non-perishable. But crude oil cannot be stored at very low cost, because crude oil is a highly inflammable object, highly inflammable substance. So it is not very easy to actually produce a lot of crude oil, and it is highly inflammable. So you cannot store a lot of crude oil, or if you convert it to some kind of petrol or gasoline or diesel, you cannot store it a lot. And that is why when crude oil, I will show you one important thing. So this is the, if I put CL1 here, that is the IMEX crude oil future. So that is why, because it cannot, and I'm going to the weekly chart, I will show you that crude oil is very difficult to store, and that is why, see, the crude oil prices, let me show you the Brent prices, because it went to negative. Forget about this, is once in a lifetime situation. So look at this, crude oil prices go from 100 to 30 to 40 to 80. So crude oil is a highly volatile thing, and that is why, because it cannot be stored, if it is getting produced a little bit more, then no one wants it. There is no way to put in storage, and people, and there is only limited amount of storage in the world, but it it cannot be stored in a great amount. Suppose the world demand is, listen to me carefully at this point, suppose the world demand is 90 million barrel per day. If the production goes to 91 or 91.5, within 3 months oil price will crash from 74 to something around 30 40, because you cannot store it easily. It is stored in tankers and in strategic reserves. Like after, because USA had for many days, China had for many days. After 2014-15, India has built few strategic reserves. So India right now have 14-15 days of crude oil, and India plans to have 30-40 days of crude oil in storage. Why is this strategic reserve? Why is this strategic reserve? Can you say? Can anybody say why they want to build strategic reserve? Because if there is a war in the Middle East, Middle East is a very volatile region. If there is a war in the Middle East, what will happen? India buys crude oil mainly from Middle East, and Middle East, you can see many conflicts have happened in the past. So if there is a conflict in the Middle East, what will happen? They won't be producing oil. There will be supply disruption. Then crude oil prices will go how much? 200, 150. What will India do? India cannot afford to buy crude oil at 150, 200. So for that emergency situation, we want to have a 30-40 days of crude oil. Okay, so this is the strategic reserve every country wants to build, but that is very limited. Apart from that, the commercial storage is very limited, very limited. You understand? Very limited commercial storage. It cannot be stored, and that is why if the storage is getting full, you should continuously search that crude oil spare storage, and and once in a month you should look for news articles about this. So you can look into what kind of storage is right now happening right now there. So that is why it is important to know. So these are the fundamental factors. I will take maximum 5-7 minutes more to complete the fundamental, and then we'll move to technical. So these are the important things that you keep on know. And now crude oil is such a thing, because it is not in a lot into storage. What will happen if the crude oil storage goes down? If the crude in stock goes down, I will show you a figure. Just wait. I will show you a figure. In this PPT is only I am having that figure. I will come to that. Okay. Now let me let me go to, so major benchmarks I have told you. And because the WTI price, I will tell you one more important thing. See, there is a spread of almost $3 presently, Brent oil and WTI crude oil. This tend to go to zero and this tend to go to plus 15. That is, Brent oil is sometimes $15 higher than crude oil. When market is Brent oil is $15 higher than crude oil, it happens at times. Why it is that? Because US is not exporting crude oil to the world, and majorly the crude oil is being exported by the Middle East, and there is high demand for, so higher the difference between crude oil, WTI and Brent, more it is bullish for the market. This point is clear to everybody. Higher the price of the crude oil compared to the WTI, higher the Brent compared to WTI, higher the difference, more bullish is the crude oil in general. Clear? Everybody? I'm looking for answers. So if you can put into the chat, it will be good. Is my voice reaching you? Am I audible? Yeah. Yeah, clear. Okay, okay, okay. Thank you. Thank you. Suddenly it stopped, so I did not get it. Thank you. Thank you. Now, uh, coming back to this. So higher the difference between Brent and crude oil will be. Now we have few more things to complete. Let us quickly to go through this. Okay. So as initially it was $15-25, but because of the pipeline construction, that it has come to uh, $4 to $8 range, and generally spread goes up during crude price up move and declines during price correction. Now this is the MCS crude oil. I told you about it. It trades from 9 to 11:30 in the summer, and in the winter it trades from 9 to 11:15. Okay. Now this is the most important part of the fundamental that I'm going to cover in next 10 minutes. Okay. Now please understand, what happens is that whatever crude oil that is produced in the world is consuming almost 95 million barrel per day. Okay. Now, what is crude oil uh, produced in the world? Every country consumes its own crude oil. Every country produces less than it requires. So whatever crude oil India produces, it consumes itself. Only the Middle East have almost 81.5% of the crude oil reserve. Middle East are few countries like Arabia, Iran, Iraq, Kuwait. If I have the map open till now, I will show you. So these nations, okay, this Saudi Arabia, Yemen, Oman, Iran, Iraq, Syria, Lebanon, Israel, this Egypt, Sudan. So these area, this small area, okay, not even Turkmenistan, Afghanistan, Pakistan, only this small area, Egypt, Sudan, Yemen, this small area, not even in Turkey. Okay, so this small area has almost 80% crude oil the every country produces. Now what happens is that whatever crude oil other countries produce, they consume themselves. Now the extra crude oil, Nigeria, Kazakhstan, they are small, but whatever, and one more country, that is 85% is here, and rest are concentrated in Venezuela, which has the highest oil reserve but produces almost nil because of the unrest, and USA. and Russia are also major producers. But if in terms of reserve, see, Russia and USA are producing a lot of crude oil, almost more than Saudi Arabia, but they don't have much reserve. Their reserves will be depleted in 10, 15 years, Russia and USA. But these countries have reserves worth of maybe 50 years, 60 years, 70 years. Okay. So these countries have 85% crude reserve. Okay. A group of 7, 8 countries was set up in uh, Saudi say was set up in 1960 with the help of, just a second. Yeah, I want to remove the cursor. Yeah. So they produce almost 25 to 40% of the global crude oil. They are the only exporters. Nobody else exports. Okay. And they have country-wise quota. So they decide that this much crude oil we are going to produce. Let me show you a little bit about the OPEC. Okay. So every month, what OPEC does is that they produce a report. Okay. If I go to the OPEC website, OPEC website I'm going. Okay. OPEC website I'm doing. So these are the OPEC homepage. Okay. Now, this OPEC countries every month they produce the monthly oil market report, and this is the benchmark that we all should follow. And the past reports are also there. Okay, past reports are also there. Like any 2021, you can download that every month's report. So I have downloaded 2 reports. Let me go to this and show you. Okay, now this is the 2020 report, and I want to go to the page 68. Okay, page 68. If I want to go here, 68. So I want to show you one important thing here. See, if I enlarge it a little bit, in 2018 they were producing almost 32 million barrel per day, but because the price was decreasing, they brought it down to almost 30 million barrel per day. Okay, these are in kilo barrels, so I'm talking in million barrels, so that is 31 million barrel per day. Then it came down to 30 million barrel per day. So they have a spare capacity to produce 35 million barrel per day. Now what they do is that they control the market, and why I will show you here. Okay, look at this. I will show you a few important things. Okay. So what is important is page 37. So I'm going here, page 37. See, world oil demand. What they show is that in 2020, due to the COVID, the demand was low, 91 million barrel per day, and slowly it is increasing. Slowly it is increasing. In first quarter it was 93, then 95, then 97, 99. So average demand for the year was 96 million barrel per day, and this was growth of over 2020 it was growth of 5 million barrel per day. The next year, for 2022, they expect there will be a 4 million barrel per day growth. Okay, just a second. Now, page 47, key drivers of growth and declining supply. Okay, page 47, let us go. See, what we will get here, that which countries are producing crude oil more. Now you can see the USA is a huge producer of crude oil. Okay, so America produces this much, and out of that, all these countries, USA produces a lot. China also produce a little bit, India produces little bit, but all countries are after that very small, 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 small. Now, next 1 year, which country will add to the growth? That is the US, the Russia, the Brazil. So these are the things that you need to keep track every month. So I will share this sheet with you so that you can know the key points in every month's report you need to produce. Now look at OPEC oil production. It is in the page 57. Now OPEC production is only 25 million barrel in 2020. In 2021 it is 26, and in future they will produce. Now they have a capacity of 35 million. They are producing only 25 million. Why can you say any, can anybody tell me why they are producing so much less as they have high capacity? Why they are producing? To fix the price. They want to command the price. This is the most important thing that all of you should understand. They want to have a price because they know if they produce a little bit more, the price will tumble from $80 to $40. So they want a stable and high price. They want to control price. And when Donald Trump was the president of USA, he was forcing the Middle East countries to produce more oil so that oil remains below $60. But Biden does not have any such intention, and that is why once Biden had come to power, the crude oil has gone to $80. If you see the crude oil prices, we also sometimes crib about why crude oil prices are going up. See, this is the time when Biden came. Before that, see, in the Trump era, crude oil was mostly in $50 range because Donald Trump was pushing the countries to produce more so that oil prices remain low. This is the time they had, once it has gone up, but Donald Trump had forced him to bring the price low. But once uh, 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 this is the time when Biden came, the crude oil prices going up, and I expect crude oil prices to go towards 100 because Biden is not pushing them to produce more crude. Okay, now this is one important point about OPEC. Okay, commercial stock movement. This is the most important page. Always keep an eye on this. So if I go to the page 75, I will share this with you. See this chart always. This is your main thing. You should see what happened due to this is, and let me enlarge it. What happened in 2020? This is 2020. The stocks went up, and as stock went up, price for one particular day for one particular contract went below, went to minus 40, but price for few months trading in 20s. Why it was trading in 20s? Because it was trading in 20s because the sorry, the stock was very low. Stock was very high. As I told you, there is very little storage. So the stock was very high, the prices tumbled. Now from 31 million, यहाँ पे 31 मिलियन प्रोड्यूस कर रहे थे ना, 30 मिलियन से इन लोगों ने 57 पे जाता हूँ, they started producing just, this is 2020. Okay, so they in 2020 they even reduced more. Okay, so they started producing much less from 30 million to 25 million, so that this stock is dwindle. And once the stock comes down, what happens? We can see in the chart, the price is going up. The price is going up. Clear why prices are going up? So every month this report comes, monthly report comes. What we will see? We will see the how the crude oil prices are going up. Sorry, just a second. How the stock are going up. Now, last few points. Page 80, 81. Okay. Page 80, 81, 83. Now we have to see. So, so right now, to the market needs this much amount of crude. See, market need OPEC to produce this much amount of crude, but OPEC is producing below that. To remain the stock to stable, OPEC, this much amount of crude is required to be produced by OPEC. Other countries produce full to the brim. So OPEC is producing little bit less than that. So the stocks go down, and when the stocks go down, price will skyrocket. Fine. So the difference that is required right now, you see that this is the difference that is required, but OPEC is producing some 26, 27. Okay, the OPEC producing is this much. OPEC producing 25. So kitna? So this much amount they are producing less, so that they want the oil to go down. Okay. So I have finished about almost. They are predicting what is going to be the demand and everything. Now I will conclude the fundamental part in next 5 minutes. It is because the topics are large. It is taking a little bit time. So what is right now happening? Right now the OPEC plus. What is OPEC? See, this Russia produces almost 10 million barrel per day. Out of OPEC countries, if I go to 47. So Russia produces almost 10 million barrel per day. Out of the OPEC countries, if I am talking about, uh, produces almost 9 million barrel per day, the Saudi Arabia and USA. USA weekly crude oil production. If you go here, what you will get here is that every week, what amount of crude oil? 10 million barrel per day, not per quarter. Now see, you will get what US is producing every. So you need to track this on weekly basis. How much US is producing, and why I say that Biden does not want the crude oil prices to be low is this. See, when Trump was the president, what were the crude oil production in USA? 13 million barrel per day. And when he took over in 2017, see, it was 8. So they took price from 8 to 13. They were producing a lot. Now, what Biden did is that when he came to power, he had taken away all the permits to produce crude oil. Okay, in USA, because he said that he wants a cleaner energy. But you cannot wish for cleaner energy by producing less oil and buy it from the Middle East. So what will happen if you produce less and buy it from Middle East? Middle East won't be producing much, so the price will go up. Now Biden has started again asking everyone to produce, and see, that is why the production is going up. But once Biden came, Biden actually forced down the production. Biden forced down the production because he did not want the crude oil to be produced, because he said this is carbon emitting. But right now he has realized that he has become only he is being now be taken for granted by the OPEC. OPEC is not producing more. Crude oil prices are higher, so they are producing much more right now. So what Trump was doing, Trump increased the production a lot, but Biden, who initially actually canceled the production permit, now he's increasing the permit to produce. So always remember, always track how much crude oil production in US is going. And now what is happening that OPEC and Russia every month is or every quarter they are having a meeting to decide what will be the course of production. What they are doing, OPEC plus, that is OPEC plus Russia, right now they are increasing by 0.4 million barrel per day. But still the deficit is quite huge, as I have already seen in this. As I have already seen in this, uh, the next month, sorry, just a second. The next year, demand growth 37, 38, 38. If I go, the next year, demand growth is 4 million barrel, but this is huge deficit. Right now there is 1 million barrel deficit, and next year, if the increase is like this is huge deficit. See, but OPEC says they would increase OPEC plus 0.4 million barrel per day. So there is quite good chance that oil can in between go to 120, 140 also due to this. So that is why crude prices are very strong. Now, see, every price is related. If Brent goes up by $10, the crude WTI will also go up by $10. The difference will remain same. It is not that Brent can remain at one place and WTI can go, because they are related. If the transportation cost is covered and if the gap become more than the transportation cost, then they will rush for the other variety. So you have to understand they are not uncorrelated. They go up similarly. Now this completes me the part of the fundamental. Now tell me, I am not going to delve into the fundamental. These are the things that you should regularly check. See, trading crude oil is only possible effectively if you track the fundamentals and the technicals also. Now, next couple of hours will be on the technicals. Now, tell me one thing. Do you want a 2-3 minute break? Because some people are requesting me for a 2-3 minute break. Do you want a 2-3 minute break? Okay. Come back at 16:16. I give you a 3 minutes break. Come back at 16:16. We will, in the meantime, what I will do, if there is a question with anyone, I will keep on answering. But at 16:16, I will start for the thing. In between, if people have question, I will answer them. You won't miss anything. You can look at the recording also. But I will start the new thing after 2 minutes. In between, there is a question. Please give me. Please repeat last 3 minutes. Last 2-3 minutes, I am saying, ma'am, that crude oil, sorry, Sohail Rana ji, I am repeating that next year the crude demand is going to go up by 4 million barrel per day, and OPEC is increasing only 0. OPEC plus, that is Russia. Russia has also capacity to produce 12 million barrel per day, but they are producing only 0.4 million. So what is happening is that there is high chance of crude oil can go to 120, 140 in the going forward time. Okay. Vishal ji is asking the summary, all the fundamentals. Can you summarize all the fundamental? No, sir, it is very big. I have put it in a summarized form only. Vishal Makadia ji, you have to look at the supply and demand drivers. That's all. And you have to look at all the data points that I have discussed. You have to watch this webinar at least twice and thrice to keep everything in your mind, and then start practicing in day and day. Okay. Ghansham Jhaji is asking, how crude price, dollar and equity. Sir, I will not go into the equity thing in this class. I will not go into the equity thing in this class. Right now my focus is learning to crude oil, so I skip it. If you have any question, please mail me. I will definitely answer it. Okay. Now, if OPEC most powerful lobby for crude, yes sir. Is there any other such organization? No sir, there is no such organization. Okay, production less and demand going high. Yes, Sohail Ranaji. Where are you seeing this? What is I'm seeing this? The questions I'm seeing in the question panel. Sir, with less production, are not OPEC also taking hit on their current profits? Yes, they are taking hit on the current profits. But do you know that if they produce one, they are producing 25. Now, if they produce 27, what will happen? The 27, the crude oil prices will be at 50. 27 into 50 is much lesser than 25 into 80. So that is why they are not taking a hit. Uh, what points to check in this report, sir? What points to check in this report? I have summarized. I will share this with you. What you do, you go to the OPEC website and download this report. Also, our team can share this report with you and look at these important points. I have noted it down. Now, another question: as do crude oil intraday? How much fundamental does impact intraday? A lot, sir. If the fundamental is bullish, even many a times the data points come, the bearish data points are ignored, and that's why we have to understand the fundamental. Srini Kuriji. For trading purpose, we see this fundamental on daily basis, weekly or monthly. I mentioned which you look at weekly basis, which you look at monthly basis. Mainly you will have to look at weekly and monthly basis. On a daily basis, fundamentals don't change. Which website should I check every day? Every day, if you want to, no, this I will cover. So let me start for the thing that I want to cover, the technical things. For I will take you through the resources that you need to cover. Let us start again right now. Okay. So I have covered this. Oh, one last point, seasonality that needs to be covered. See, seasonality is this, that crude prices start going up till the month of June, July, and from September, October, there is a decline. This you should remember. This is the general seasonality, because this year is the COVID and OPEC related play. This is not being played out, but this is being played out to some extent. Let me show you. This is the crude oil, right? I'm looking at the weekly chart. Now see, from October there was a dip, and from the middle of December it has started rising. Exactly, it is following the seasonality, and until then it has risen. Okay, so this is the seasonality that is generally followed. These are the main sources of data. There is EIA releases, IEA releases, OPEC. So all these are regulating bodies which compile data out of the OPEC related of the oil market fundamental. You mainly follow the OPEC. EIA is American data that we follow the inventory play. Baker Hughes rig count. Why we follow it? If the number of rigs in USA are going up, we follow it on a weekly basis to know that how much the rigs are going up, so that if the rigs increase, what will happen to the production? If the oil rigs go up, what will happen to the production? Increase. And if rigs go down, what will happen to the production? If rigs go down, what will have the production? Fall. So every week we need to follow this. Okay. US weekly crude production that I showed you. Geopolitical news. See, if there is conflict in the Middle East, oil prices generally go up. So follow if there is the Yemen related news. Last year, what happened? Some Yemeni rebels attacked the Saudi Arabian oil facilities. So those kind of news you need to show. Apart from that, major PMI data, GDP data of US, China, Russia, and India. Why? Because these are major economies. Sir, I will come to the API later when I discuss the inventory play. Why should I look at this major economic data of these countries? Because these are major economies: USA, China, Russia, India. So if their economies are doing good, what will happen to crude prices? Economy doing good, what will happen to crude prices? Please answer. Increase, right? If interest rates is high, what will happen to the crude oil prices? If interest rates go up, demand will fall. Demand will fall, because if interest rates goes up, economy will slow down, and then the economy. These are the important data releases you need to track on a daily to daily basis. Now, I will go to the technical trading aspects of crude oil. Okay. Now let us understand the technical trading strategies. Now, these are the general thing. See, before going into technical, let me explain you in a little detail. See this part. This crude oil is a thing that moves like this. So it is a very trending instrument. I show you. You can see clear downfall, clear up move, clear downfall, clear. If compared to that, I compared you to a Nifty, you will see a lot of movements in day to day. Nifty last few months have been clean, but in general, you will see a lot of up and down, to and fro movement. Okay, it is not always very decisive move, you can see. But if you go to crude oil, you will always see a very decisive kind of movement every time. Okay, if I go to auto, see every time it is falling like this or rising, falling like this, and the ranges are very big. Like see, from $30 to $90, it is becoming three times. Then again from $60 to $24, then $44 to $75, then $110 to $35. So you can understand that it is very trending kind of a move. Whatever trend it catches, it continues with the trend for very long time. So that is why trend lines are very useful in the case of trading the crude oil. This part is understood, that moves are quite big. Moves are not very small kind of moves. So when we get into a move, it is generally a very trending and long lasting move. And remember, this is weekly chart. If I go to the daily chart also, you will find this. See, I'm going to the daily chart. See the up move that started from the new year, 73 to 86, almost 20% kind of a move. So all of you understand this is a trending kind of thing. And when the fall had happened, see, from 84 to 64, almost 25% in a span of 10, 12 days. So very trending kind of move this instrument gives. Now, and let me share with you this one also. Though I know most of you would be following me over Twitter. So this is my handle. Okay, this is my handle. If you follow me, you will get many crude related inputs that I shared, market related input. I continue to share. So we won't be, those who are in the Stockage Club or TMP will be through touch through them. Those who are not, okay, you can actually follow me on the Twitter. Those who are in the Stockage Club, okay, so this is the Stockage social platform. See, we have a commodity and currency club. You can go here, and we continue to, the Shunondo is there, and we continue to discuss about the of the market, what are the things that is happening in the market, and we continue to put details about the commodities in the market. So those who are here can follow. I often post in the Twitter also, so you can follow many updates. You will keep on getting through the Twitter. Okay, so I'm just offing that to show you that where you will get commodity related updates. Okay, now let me close these things. Okay, these are right now not required, so I will just make it a little bit less heavy so that we can run it faster rate. Okay, now crude oil having this kind of a move, we always don't need to find the bottom. Like what I'm saying, see, when market is falling like this, you don't need to take a trade against this trade. Okay, so when it has turned around, if you enter here, and if you can exit at substantial move, and if you, once it has turned around, proper trend line reversal has happened. Proper trend line reversal has happened. If you even trade after that, like let me show you, even if you trade after that, there is huge juice for you. Then even in this up move, if you take short after this, there is huge juice out of you. So you don't need to be in a hurry. So see, once this fall is over, there is huge juice left. So it is not an instrument that you need to, like what we do. If I'm looking at Infosys, maybe I'm sharing as an example. So Infosys is a strong stock. If Infosys is falling, I would like to know okay, if this is the level I would like to get in, because the the moves are not very big. You see, this much it has fallen, but how much? Only 6-7%, right? And goes up over the time only this. But when we are trading a crude oil, the moves are quite big, so we don't not jump into trading a move until and unless we have a clarity in direction. Now, so broadly, what I do personally is that when it has broken the trend line, the momentum is up, the fundamentals are up, I try to trade, I try to buy this kind of dips. Now, these are the generic rules. If I have devised two specific technical strategies for you, so that on an hourly scale and how much funds needed to trade the crude, it is almost 1.5 lakh for one future. Okay, broker to broker it varies. Okay, so please understand, crude, because we mostly trade intraday, I have devised two uh, specific strategies. So are you excited to go into the strategies right now, all of you? All of you, are you excited to delve into this? Great. Now let me start with the strategy. Okay, so these are the generic thing that I discussed with you. Now, strategy number one, RSI and MACD crossover. So I have drawn a template. Okay, so I have drawn a template, load chart layout. What I will do is that I will add these in the last slide, and so that what you do is that what I am doing here, just watch this one. I am sharing. So sharing off, sharing on. So right now I am sharing it. I will share the links. So when I will share the links. Okay, so you will be able to see those right from by copy pasting the links, copy pasting these links. Okay, so right now I am going to the chart layout of this one, which is 1 hour crude strategy. Okay, so what I will do is that I will share it with you. This link you copy and you will get this. Okay, now putting into the auto mode. Now please understand the strategy. I am explaining it. Right. See, what I have here is that this RSI. Let me go to the slide. Okay. This is the slide. See, component of the strategy RSI 710 and MACD 385. All of you know a little bit about RSI and MACD. Time frame is hourly, sir. Hourly time frame. All of you know about MACD and RSI. Let me give you a little bit that is required for our trading. So when this blue line crosses this red line, generally in the MACD, we see an up move, and when the blue line is below the red line, we generally see a down move. And for RSI, I have these are modified because normal MACD is 1226 9. So if I add the normal MACD, it is not like that. See, if I go to the normal relative strength index, see it is coming here. It is 1414. So I have not taken, I have taken 710. These, after a lot of research, I have found these which I have given to work great, and that's why this. Okay, so you can say, can I alter this? No, if you alter this, the effectiveness would go down. Now let me show you, here is another, this is the MACD, the normal MACD. If I add, see normal MACD 1226.9, but I am using not this but the 385. So I am using this modified indicator. So RSI remains the decision making parameter and MACD is for confirmation. So when I am buying, please understand, as I told you, I don't need to buy the uh, buy when I'm looking at an hourly chart. I need to look at buy when RSI. See, look at this RSI and look at one important thing. Style in the 50 line, I am making it deep blue so that it remains visible to you. Okay. and making the line a little bit thicker deep blue line. Okay, like this. Now, what I am saying, whenever RSI crosses the 10 moving average from at any level which is below 50, right? So in this candle, look at the latest candle, what is happening? RSI is below 50 and it is crossing above this 10 period average, 7 period RSI. Before that candle, RSI was here. In this candle, it has crossed over. And this is happening when RSI was first started from below 50 level. It goes above this. When it happens in this candle, so buy should be actually here because it is happening in this candle. From this candle to this candle, it is happening. So buy should be actually here. At that time, I also check if the MACD blue line is above the red line. So this is my first thing that I look at. And this is the second thing I look at that time when it is happening. When this thing is happening, this is in this candle, this is happening. So I buy at the start of next candle. This is happening in this candle. So I buy at the start of the next candle. Now, what is happening here? I am saying that I see that RSI crossing here, and at that time, at the cross of the candle, this uh, this blue line is above the red uh, line in the MACD signal. So my conditions are getting fulfilled here. So at the beginning of the next candle, I buy with a I buy. And similarly for the sale, let me show you and then I will come to the risk reward and stop loss. Okay. For the sale, similarly, see in this candle, what is happening is that RSI was above 50. Next candle, see RSI crossed below this line, right? So in this candle, everything is getting fulfilled. Everything is getting fulfilled. So at the beginning of the next candle, I am shorting. I am shorting because why I am shorting? Because at the end of the candle, blue line was, this is the confirmation, was below the red line in MACD, and RSI has crossed from above in the above 50 zone. It has crossed from this to below this line, and I short at the beginning of the next candle. Now, when I am trading, my stop loss is 40 cents and 30 rupees. Now, I want to make a little bit of change here. Instead of 40 cents, let me, because the crude oil prices won't be same all the time, because crude oil prices won't be $80 all the time. $40, 30 cents, or let me put it 0.45%, and your target is $0.60. So again, or 0.75%. So let me put it in the percentage form so that it becomes, when, because crude oil tomorrow becomes $40, you won't apply for $0.40, right? Your target will be this. So I am highlighting this because this is the most important thing. So what I am doing here is that I am making this bold. Okay, I am making this percentage bold because percentage is the most important thing. So if I go to the home, I am increasing its font also to 18 and increasing its font also to 18. Yes. Slideshow from current slide. So what I am saying, when you have these conditions, that it is, this is happening, this RSI is crossing from below here, RSI is crossing from below here. In the next candle at the very beginning, you buy from here with a 0.45% stop loss, which is presently 0.40 cent and 30 cents. So you have to look at the WTI crude oil chart. And at the same time, what you do is that uh, put it into side by side mode. At the same time, what you do is that you put MCX crude oil, MCX crude oil, crude oil, crude oil future MCX, right? You put it here, and in the MCX crude oil, I'm just hiding every indicator. Okay, so here I'm hiding every indicator because in the MCX crude oil chart, I don't need any indicator, right? So I'm not looking at it. I'm not looking at it. I'm just looking at the bear chart. Now in the WTI chart, this is getting fulfilled here. Things will be exactly similar. Things will be exactly similar here. So in this trade, this happened at 9:30. So at 9:30, whatever be the price, I will enter here with the I don't need this chart at all. So I will enter here with the 30 rupees stop loss and 45 rupees target. Whatever price I get here, I don't need this chart at all because I will enter according to this. So I am entering at this point, whatever price available here, I will enter here and I can see that the price went up here, went up here. This is also the hourly chart. Yes, this is also the hourly chart. As I see from this is around the point of time when it is happening, 9:30 at the very beginning, you can see the price going up. Everybody clear? Everybody clear about it? Everybody clear? Rohit Oshi's PPT mentions 50 benchmark crossing of RSI. Where, sir? Where, sir? Yes, this is your PPT, right? I say that for buy, RSI should start from any level below 50 and close above 10 moving average. I did not say that RSI should close above 50. What I say that RSI should start from below 50 and cross above this. RSI may not cross this 50. I did not say RSI has to cross 50. I said buy when RSI should start from any level below 50 and close above 10 moving average. For confirmation, MACD should be above signal line at the end of the candle. Buy at the start of the next candle. For buy and sell trade, 0.40 or actually 0.45% is the target and 0.75% 0.75% is the target, 0.45% is the stop loss. Is it clear, Rohit ji? Ghanshyam Jha ji asking what is our target in MCX chart? Sir, MCX chart from where you enter, it will be around 45 rupees. As I mentioned here in the PPT. If the close of the candle is big, there is not a worry because I will show you many a times after a very big candle. Look at here. Look at here, ma'am. See, this was a very big candle, but even after this, the fall was very big. So even if you are facing a very big candle, not an issue because your stop loss is 30 rupees and your target is 45 rupees. Am I able to make you understand, ma'am? Am I able to make you understand, ma'am? Or sir, Nirupa, not sorry, Nirupa. So is it clear, Nirup Santra ji? Great. Now, light crude oil chart shows time of 8:30 when MACD gets buy signal. That's why 8:30. It is at 8:30. So this 8:30 candle closes at 9:30, sir. Whatever you get are the starting point of any candle. See, the last candle is 23. Why it is 23? Because 23:55 it closes. Now look at this, sir. This candle is 130. Why at 130? Because on Sunday, on Friday, it closes around 2:30. Let me show you. Oh, oh, oh. Let me show you here. Here the day starts. See, it shows you at 4:30. Okay. Now the day ends. The day ends here, right? The day ends shows you 2:30. It is closing as 3:30. So the candles are like this, that when it is 8:30, it is ending at 9:30. So when 9:30 is there, our market is already open. Obviously, there will be few trades which will come post our market open. So here in this C, in this trade, you cannot participate because this trade is happening at 12:30. That time our market is closed. So this trade you cannot participate, sir. This is because our market is not open that time. But this trade you can definitely take part, because 8:30 candle went at opens closes at 9:30, and at 9:30 our market is open. You are not looking at much at this chart. You are looking at this chart. Let me hide this chart. This is not at all required. So let me look at this chart only and trade with a stop loss accordingly. Is it clear? You are not getting light crude oil future. Use sir CL1, then use this symbol. Look at this CL1, CL1, then this exclamation. You will get Shailendra Mehraji. So all of you clear about this strategy? I will show you more trades on this strategy. But is there any right? Zafar is asking. Hourly candles are mostly used for swing strategy for few days. No, sir, this is not for few days. This trade you will get your return within next 1 or 2 hours only. Zafarji. Only laptop. What is Nirup Santraji? How do we plot both charts on mobile? No, sir. In mobile, it is, sir. In trading, you need to have a laptop. If you want to, in the mobile also, you can open this chart, sir. You have to plot this chart in laptop and then open it in mobile. What I will do is I will share this link. You can copy paste in your trading view in this link, and you can open this chart from your mobile also, sir. What can we trail the target? Sir, trailing target is always there because many moves are big. Many moves are big from 85.52 to 87. So you can understand the move was 120, 130 points. Trailing is a different thing, that is on your discretion. But what I am saying is that this is the basic method. Now you can alter the method by many methods. See, here there was a failed trade. Here there was a failed trade. These were very good trades. These were very good trades. But once in a while you will have failed trade also. This was a failed trade. This was a good trade. Okay. So this was a good trade. This was a good trade. This was a good trade. This was a failed trade. This was a failed trade. This was a failed trade. On 3 failed trades. Okay. But most trades are good. This was a good trade. This was a failed trade. This was a great trade. This was a great trade. This was a great trade. This was a good trade. Eventually it went up. This was a good trade. 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 This was a failed trade. So the success ratio would be in the tune of, I would say, 60 to 65% to 70% would be the success ratio. 30 to 35% time you will lose money. But suppose you are having 10 trades. Suppose you are having 10 trades, out of which in 4 you lose money. I am taking the bad thing. So 4 you lose money by 30 rupees, and out of 6 trade you make money by 45. So where do you end? Here you lose 120, here you gain plus 6 into 45, that is 270. So eventually you will gain na. If you sum both of them, eventually you will gain. So that is the point I am saying, that this is quite a decent strategy. You can see the kind of trades you are doing, you can apply it. You need to keep stop loss in the system, sir. because crude oil sometimes can move very rapidly. So instead of 30, you can take many 50, 60 points at times. Sir, you look at the light crude chart, Snehashish Chakraborty ji, and whatever price is available in the MCX, you trade according to that, have 30 points stop loss, 45 target. You don't look at the MCX chart. When conditions are getting fulfilled here, you enter the trade as itself. You don't have to look at the chart of the MCX crude. You just whatever, see, if you have got a sell signal, so you sell here. You sell here with your stop loss and target at whatever price it is right now trading in the MCX. That is what I am saying. Sir, what will start sharing the link of the charts with settings? Sir, you will get this in the PPT in the night. Raju Kunaji. How many entries a day can we expect? Let us see how many entries we have in this week, right? Let us see in a week how many. So our week started from 17, right? So few of the trades you won't get. See, this trade you won't get. Why you won't get? Because it is happening in the morning. But total 1, 2, 3, 4, 5, 6, 7. So 7 trades in 5 days. Last week, the week before, which started from uh, 10th, right? The week before there were 1, 2, 3, 4, 5, 6, 7, 8 trade. So weekly 7 to 8 trades you are getting. Weekly 7 to 8 trades you are getting, and you want, that means daily 1 to 2 trades in general. So working professional will have to take, if this is the strategy, working professional have to do trade after 7:30. If you cannot find a trade, sir, in the office hours, take trades only after 7:30. Rohit Joshi ji, which contract one should trade? Current, because the next contract is very less traded. See market data. This is very important point. Market watch. Okay. Now top 5 contracts, instrument future com. I am going to crude oil. Okay. Now see, the next contract is quite illiquid. There will be bid offer gap of 578 rupees. 1292 is the daily volume, and the present contract has 64,000. So always trade at the present contract, except the last day of expiry. What are the breakout timings? Sir, it can happen any time of the day. Margin in intraday depends, sir. There will be brokers who will give you at 70,000 also. There will be brokers who will charge 3 lakh also. I think there is a South-based broker which charges Blue Angel or Blue Poppy. What is there? Which gives very high leverage. Blue Poppy brokerage. There is a kind of someone said me, yeah, Blue Poppy. Okay, no, not this one. There is a South-based that gives at very low brokerage also. Some blue starts with blue, but mostly will require a higher leverage. Require at least 1 lakh rupees. If crossover happens overnight, then you miss that trade, Rahul Kohli ji. There is no way you can do this. If your market is not trading that hour, how can you enter, sir? Blue Alice, right? Alice Blue, right? Sir, any broker is good. Any broker is good. Nowadays, nobody charges more than 20 rupees. So any broker is good, right? Arvinder ji, suppose I am telling you, suppose you find a long entry at this point. At this point, you find that uh, the crude MCX price is 6250. So your stop loss would be, you are not looking at chart. Your stop loss would be, if the present price is this, you find if you find a entry signal in the WTI chart. At that time, present price in MCX 6250. So your stop loss is how much? This 6250 minus 30. So your stop loss is 6220. Your target becomes plus 6250. Sorry, this plus 45. This is for present. Suppose the crude prices has changed. So what you do? You have your stop loss as 0.45% of, sorry, 0.45 into this by 100. So approximately same, and your target in that case will also say 0.75 into this by 100. So your target also become 6296. Because I said that crude oil prices would change. For now, this 30 rupees, 45 rupees is working, but actually you need to follow the percentage thing. Indicator is here. RSI 710, MACD 385. We will be learning our next at a 15-minute time frame. Our next strategy. Option contracts are illiquid, sir. Yes, on the expiry day and before that, don't trade the near month contract. Then trade the future one. Like here, 18th February is expiry. So from 15th February or 16th February, start trading the March contract. So there can be slippages, but crude oil contract is very liquid, sir. So generally there are not slippages, Ghansham Jhaji. GTT order is beneficial or it might get risky in crude oil. See, GTT, you put the trade instantly, sir. There is no thing for GTT. But yes, for stop loss and target, you can put bracket order. And in 90% case, it will get concluded in the day itself. Probability of success is 60 to 70%. I'm touching the free oil futures only, sir. I'm not touching options. So what I am touching is crude oil future only, Vijayji. Volume does not matter. Keshav Rawatji, sir, is fundamentals are showing bearishness. Our setup shows buy trade. What should we do, sir? देखिए फंडामेंटल जनरली कैसे होता है जानते हो, मैं आपको बताता हूँ. ये है एक setup based trade. But if I am looking at the chart and I am finding that it is bullish, whenever there will be fall, like yesterday is a fall, it is a big fall, and I know that this was my earlier swing high. This is the classical trade, earlier swing high. So suppose here I am getting sorry, here I am getting at a pullback and I am bullish. Fundamentally, I am quite bullish. I will buy here. This is not strategy based trade. Strategy based trade on the short side also, they are doing quite good. What I gave you that in general, if the price is falling and I know fundamentals are bullish, even if my signal is not there, I will buy here, sir, and buy and see if I have bought here. You can see the kind of gain I have had, 83 to 85. So you can understand almost I would say 200 rupees or 170 rupees I had. This is system based trade, sir. What I have given you is system based trade. Here you gain only 45 rupees only. But if you are bullish fundamentally, you can have bigger trades, and that will require you some kind of experience. That's why I taught you options. I won't teach you, not very liquid, sir. Micro is not there. Micro was there, but right now there is no micro contract. Rohit Joshi ji. Sir, can we trade US crude directly from India? No. Sir, time sync नहीं हो रहा है. Give an idea on time calculation of US time and Indian time. Sir, Indian time 9 बजे से it will start at 9 and end at 11:55. Okay. USA after 11:55 will continue till 3:30, and again after 1 hour it will again start next day at 4:30. Okay, let us now move to the next strategy. ठीक है? We have answered a lot of questions. If there are any questions, we will take. Let us move to the next strategy. CL1 is the symbol for US crude oil, NYMEX crude oil, light crude oil, sir. Ganesh ji. Let us move to the next strategy. All of you agree? Let us move to the next strategy. It is on a 15-minute time frame. All of you agree? You want to understand that? Sure. Now let us move to the next strategy. Till now, you have enjoyed this strategy. Tell me, looking at this, it looks quite effective for you for this strategy. Sir, Vishal Sharma ji, आप मुझे mail कीजिए. I will answer you. But this is not about equities, sir. Reliance ONG से आप मुझे mail कीजिए. I will reply you. Not in this webinar, sir. That will defeat the purpose. Yes. Now let us move to the next strategy. Its strategy is 60 to 70%. Sohail Rana ji, depend on the kind of market situation you are in. Now let us move to the next strategy. We have two strategies to cover, and don't mind if I have to like prolong by 10 minutes or 15 minutes, because I want to give you the full content without compromising. Is that fine? If you want to take a break, you can take a 2 minutes break from here. Take a 2 minute break. Come back at 5:02. I will start. Take a break. I am giving it a break. Okay. Sir, CFD, there is always a risk of delay. I know the free chart, it is delayed. But then in that case, you can use the investing.com chart, Revant Kumarji. It is same margin for buying and selling, sir, no difference. No, sir, stop loss should be on the system. I have mentioned this. I have mentioned this because I know many people do this. I mentioned this. Stop loss target is no on price hit basis. Don't wait for closing candle. इसको रेट में कर दे क्या? इसको रेट में कर दे. इसमें रेट कर दे, because some people do this and then they will complain, sir, your strategy is not working. इसको बड़ा कर दे. हाँ हाँ. I know people will do this, and that's why I have mentioned it. And avoid 1 hour before and 1 hour after EIA inventory data release. That I will explain later. Nickel, I am not going to cover here, sir. Please. We will take a different session on that. I don't know the Dubai trading hours, sir. Don't have any idea, Venkatji. You should do it NYMEX chart. It is future chart, sir. It is not spot chart. See, I show you. See what I am doing. Crude oil, WTI crude oil. If I go to futures, crude oil futures, NYMEX, this is the one I have chosen. The futures chart I have chosen. I again show you. Crude oil futures, NYMEX, the front month. Current month is front. This is one I have chosen. You have to choose this one. Sir, one is 15-minute strategy. You will get 3-4 trades in that during that. And one is 1 hour. You get 1 or 2 trades during day. So in the 15-minute strategy, you will often get 3-4 trades. So obviously, if you want to trade more, but this strategy is a better one, which I have given you right now, is a better one, I would say, because this is on an hourly time frame. US oil chart is CL1, which is US traded NYMEX crude 1. West Texas Intermediate is the full name. WTI crude oil. Naveen Kumar ji. No, I have not written Pine script on this, but I will share the chart setup in the PPT. Sir, trading view can be delayed. Let us now move to if it is free, then use investing.com. Either 3,000 loss or 4,500 profit for the next trading strategy. Okay. For the next trading slideshow. See, super trend multi-time frame strategy. Okay. Now let me show you what is super trend. Okay. And I am going to the CL1 NYMEX chart. Okay, the 15-minute form. Let me go to the 4-hourly chart. Why I have chosen. Okay, so these dotted lines that you see right now here are the day break. See, this candle is 0.30 because it ate at 3:30, and this is 4:30 when it is starting. Now, it is starting at 4:30. It will end at 8:30. So these are the 4-hourly candles. Okay. Now, why I have chosen is, look at this. Okay. I am introducing super trend. And I follow this one. Super trend multi-time frame strategy. So I follow here HCL by 3. That means input is not high-low divided by 2, high-low close divided by 3. That is the input. Okay. Now look at this chart. Doesn't it look like amazing? What I was telling, when it is trending, it is a very good thing to trade. Doesn't it look like very amazing when you look at super trend? Tell me. And when it was down, it was like this. No answer. It looks very amazing, right? So you can definitely tell from this chart that this 4-hourly super trend gives clear aspect or clear indication of the medium term trend. That all of you agree? That all of you agree? Very clear indication of the medium term trend. Tell me. Fine? Fine? Now, at this point, tell me, if the trend is up, what you should do? Super trend setting is this. I will share this also with you. 10, sorry, I use 10-2. Even with 10-2, it will be more precise. It will be more precise. So when it is moving up, like from 79 to 86, it gives clear indication of a short-term up move. All of you agree? So when it is moving up like this, you want to buy, and when it is moving down like this, what do you want to do? Sell. In shorter time frame, आपको छोटा stop loss से trading ढूंढना है. Like here you want to sell only. In this portion you want to sell only. All of you agree in this portion selling will be better. Buy trade में risk है. There is risk on buy trade. Now I do the same thing. This strategy is very simple. See, I go to 15-minute chart. ठीक है? Now 15-minute chart, this gives me the 15-minute super trend. Okay? What I do, and this is possible only in trading view mainly possible, and many other software, but not in investing, I think. Go to the here. I add another super trend. Now see the magic I am doing here. Okay. Indicator time frame, what I am taking? 4 hours. And HCL by 3. Making it 2. Now, these small dots are giving me the 4 hourly super trend. See, these small dots that you can see. Let me see if I can enlarge it. Right. No, I cannot change it. Uptrend is like this. Yeah, I have changed it to like this. Okay. And downtrend also, let me make it red color. Line. Okay. Now see, and let us make it blue. Okay, the color will be different for you. Blue is bullish, and this red one, let me make it pink. Okay, dark pink, dark purple. Okay. Now the bigger and smaller. What is this? It is clear when it is bullish, and it is very clear when it is bearish. Tell me. It is very clear when it is 15 minutes is also same setting, sir. 15 minutes is also, now it is very clear when it is bullish, when it is bearish. Right? Now what I will do, let us change this setting. Okay, let it remain as it is in the past, because I can see somewhere the line is getting added. I don't know why. So let me go back to the older setting also. Not an issue if you have this dotted, because if it is above the dot, it is bullish. It is below the dot, it is bearish. I have done the same thing here. Okay. Now please understand what I am doing here. I am trying to buy. Let us understand from the PPT. See, this will be the lower one that we will be. 4 hourly and 240 minute super trend defines the broader trend. 15 minute super trend defines the intraday trend. Now buy when price is above the 4 hourly super trend, that is above the 4 hourly super trend, and price from above drops towards the 15 minute super trend. That is from above, it is coming closer to the 15 minute super trend. At that time you buy, with a stop, if it comes within 0.05 cents, that means what I am saying is that, see, let me show you an example. Here, it is not exactly touching the super trend, but what is the low? 0.33. See, 0.33 is the low. Look at the low here, 0.33. And what was the super trend? Look here. The super trend was 82.30. So what I am saying is simply, when you don't wait for it to touch, if it comes within 0.5 cent of this, just go and buy. And when you buy, and similarly sale will be the same. Sale will be same, like when it comes within 0.5 cent of this line and overall market in the 4 hourly will be down, it pulls back to this, you sell here. Now entry, exit, stop loss, target is on price hit basis. In the earlier thing, only stop loss and target was price hit basis. Entry was only when the candle closed. Here it is different. Here, as soon as it is coming, you are buying. You are not waiting for the candle to close. So if my candle is coming here, in the previous candle only I should have bought. So here I should have sold. When it had come within 5 cents of this line, I should have sold, because overall it was red and it is coming to this, I should trade. And my target is here again 0.25 cents to $0.25 or 80 rupees. Let me also alter here, or let me alter here and make it 0.3%. 0.3% is your stop loss. So I am making it big, bold, and your target is 0.40. That means, or 0.45%. 0.45% is your target. See, 18 rupees and 30 rupees is good for today's market, but in future what may happen, that the base price may not remain $80. So in that case, apply 0.3% as your stop loss, 0.45% as your target. Right now it boils down to 18 rupees as your stop loss and 30 rupees as your target. That means 1800 रुपए आपका स्टॉप है और 3000 रुपए आपका आने को आएगा. Clear? Clear? Now, Sohail Rana ji, can I use 1 hour in place of 4 hours? Obviously, you can use, but the results won't be similar. But many trades will be common. We will use only in WTI crude. We don't apply any indicator on MCX crude. MCX का chart हम नहीं देखते. Pendota Venuji, we are not looking at MCX chart because this is incomplete chart. Clear? Clear, sir? On chart I will go, sir. On chart I will go. Right now I am showing. You don't add. I am showing. Don't worry, sir. Don't worry. I am going there from current slide. Okay. So I will show in the chart. See, this was a trade. Price came here 8213. You booked. You got 40 cents here. Here you bought. Why do you go buy? Because it was above green. When it comes, you buy, it goes above. When you comes, it buy, it goes above. Here you buy, it goes above. Here there was a wrong trade. You sold because it was below this rate and it came here. But what happened? Your stop loss was hit. Some trade में तो stop loss hit होगा ही. होगा ना? Here you bought, you had profit because it was above green. कोई भी स्ट्रेटेजी बना लो, कुछ ट्रेड में तो स्टॉप इस पे ट्रेड लेना था. It came near this, Now, see, it went up almost 80 cents. My target is 40 cents. And my stop loss is 25 cents from this from my entry point. Okay, it came, it gave profit because it was green, 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 green. So all these buy trades of profit. Here it was red. Though super trend changed color in 15 minutes, but it did not go up. So this gave me profit. So I am showing you in chart. This gave me loss. Why? Again, why the losses are coming here? You have to understand. Right now we are bull market. So see all the short trades are only getting wrong, and that is why I told you I follow a little bit fundamental. If I follow the fundamental, I may avoid the short trades because fundamentally I am very bullish. Clear? Why I said that we should look at we should know the fundamental. Is it clear now? Yes, sir. I suggest bracket order. Bracket order is a great thing. When we started trading, it was not there. It is a great thing. Now I will take questions on this strategy. It is a buy on dip strategy. Zafarji. Exactly. No. It is not turning green. Zafarji, please look at it very carefully. You have misunderstood me. Zafarji. This is already green. 240 minutes. The super trend in shorter time frame is already green. It is pulling back here. That is why I am taking the trade. I am not taking the trade when it is turning from red to green. When it is pulling already green, it is pulling back to green. I am taking the trade, Zafarji. It is above one is red. It is already red. It is coming to this red. I am taking this trade. Is it clear, Zafarji? Sapnil Karat ji is saying where to buy. Sir, I told this only. When 240 minutes super trend is bullish, if price is pulling back to the super trend within 5 cents of this line, you buy with a stop loss of 25 cents or 0.30% and with a target of 0.45%. Sir, why I select our higher time frame as 4 hour instead of 1 hour? Because sir, what I find, let me go to the 4 hourly chart and hourly chart both. Okay. Now, see, sir, in hourly chart, there the trend is not properly defined. It is an uptrend, but many a times it is turning red. But if I go to the 4 hourly chart, you see it is much clearer trend you get. It rarely turns red. So, hourly chart, if you see as a medium term chart, has much noise, and that is why I want to avoid this hourly chart. You can, if you wish, at least do 2 hourly chart, but don't go for hourly chart as the lower time frame. Is it clear? Is it clear, sir? Sapnil ji, we need, because it is a multi-time frame strategy. Sapnil ji, please understand, it is a multi-time frame strategy. I am buying when price is above the 4 hourly super trend. And when I am buying, when in 15 minutes there is a pullback. Let me explain to you in the chart. Okay, let me explain to you, Sapnil ji. The price is moving like this, right? So when there is uptrend, what happens in this uptrend? The uptrend is not like this. Uptrend happens like this. Up, pull back, up, pull back, up, pull back, up, pull back. It happens like this. So I want to know from 4 hourly that we are already in an uptrend. And in this 15 minute when there is pullback, I want to buy. Is it clear, Sapnil sir? Is it clear, Sapnil sir? Sapnil Kamli ji. How target and stop loss calculating in percentage? Very easy. Very easy, sir. Go to Excel. Suppose tomorrow crude prices has become 4,500. Suppose tomorrow crude prices has become 4,500. Right? It has become 4,600. Suppose. So For my stop loss, what will happen? My stop loss is this minus this into 0.3 divided by 100. So my stop loss at that time when the price, right now my stop loss is 18 rupees, that time my stop loss will be 14 rupees. And my target will be this plus 0.45 into this by 100. So right now my target is 20 rupees, 30 rupees. That time my target will be 21 rupees. स्वप्निल सर, टू सुपर ट्रेंड से ही तो मुझे पता चलता है ना कि कौन सा बड़ा सुपर ट्रेंड से द बिगर सुपर ट्रेंड इज गिविंग मी द ट्रेंड डायरेक्शन एंड आई एम नॉट using the bigger super trend to entry. I am entering with the help of a smaller super trend. Bigger super trend is getting the overall trend. Smaller super trend is getting the entry. That is why two super trends, Sapnil ji. How to understand inventory data? I am coming to this. Regarding this strategy, if there is a question, please ask me. Quantity of single lot changes with the price of a crude oil. If there is 1 rupee change, 100 rupees will be the change, sir. Rahul Kohli ji is, it is always 100. Sir, please share this chart also, make it accessible. Okay, let me make it accessible. Sharing on, I will add these two at the end of this, and this I will share. Okay, and its name would be, sir, what is the difference between WTI chart and NYMEX? Sir, NYMEX is the exchange. NYMEX is the exchange. WTI is the instrument. Like NSC is the exchange, Reliance is the share, Prakash Rao ji. NYMEX is the exchange. NSC is the exchange. Can we add any other indicator for better? Sir, any strategy you can do better by altering it. I am not saying this is the best. There will always be better strategies. Sir, every setting of the super trend will be in the chart. You will get in this chart and see the super trend setting I am putting here. All super trend setting are same. 10 SCL3 2. Bigger, smaller, all the same. Only in the bigger, the chart time frame I take to 4 hourly. This is not possible until you have a chart which have two kind of super trend. So that is why I am sharing this with you. You can use this even if you don't have TradingView paid. If I share this template, you can watch this template. So for those who don't have paid version of a super trend, I am making life easy for you. Is it clear? Even if you don't have paid version of accuracy is very good, sir. Accuracy is more than 65%. I showed you, Vishal Makade ji. Entry criteria, Ranjan Kamli ji, very simple, sir. For buy entry, again I am repeating. First you have to see that if the price is above this super trend, and then you have to look if the price is pulling back to this smaller time frame super trend within 5 cents of this super trend line. If it pulls back here, you take the entry. Like here also it happened. See, there was another entry I missed. Price pulled back with 5 cents of this super trend. So what you do? You take the entry here. Clear ho gaya? Is it clear? Tell me. So there can be scenario, I got a buy signal at NYMEX but entered at high buyer price in MCX. In that case, my stop line target would not be in sync with NYMEX. Sir, you have to execute at that same point of time. You cannot wait for very long time for that, sir. You have to enter. If there is a substantial delay, Ghanshyam ji, then it will be difficult. Obviously, it will be difficult. Sir, algo trading is there in every market, but you have to define your strategy. Again, if you ask me, out of these two, the first one is more favorite to mine. The success rate and the reliability is much more. Here also it is good strategy, but compared to two, जैसे आप मुझे पूछोगे ना कि आपको लड्डू पसंद है या आपको रबड़ी ज्यादा पसंद है, पसंद तो मुझे लड्डू भी है और रबड़ी भी है, but I will like rabdi little bit more than laddu, isn't it? It is like that. Exit is based on your stop loss, sir. Exit is on your stop loss. Pendota. 2 to 10 days तो very 2 to 10 days का strategy तो I told in the very beginning, sir. If you have to need to have a fundamental view, and if you have a fundamental view, and if you see this trend line is being broken, then once you enter, if you are looking for 2 to 10 days, and that is often I do, is that if I am bullish and I see this trend line is being broken, what I will do is that this is because you are asking, I am showing you. I will go to a 4 hourly chart and I will put a simple super trend as my stop loss. Super trend, and the setup would be 10 and I will make it 2. So see, from 75 to 86, big move you can have over a period of 10 till 12 days. So first you have to have a fundamental view. You have to see that price breaking out of a trend line, and then if you buy, you just trail with this stop loss. You can see how beautifully it execute. But many people won't have the appetite to trade crude oil overnight, because overnight it can move even 30,000, 20,000 rupees. For them, I have given the other strategies. Vishal Malkanji, sir, this we should wait until closing of the. Nahi, 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 nahi. I have mentioned it here. Dear sir, I have mentioned it here. Why? I have mentioned it here, sir. Entry, exit, stop loss, target is on price hit basis. Don't wait for the closing of the candle. I am making it red so that you don't miss it. Got my point, sir? Yes, then you have to watch continuously. Obviously, trading crude you have to do continuously. Frequency, I said, you have to revisit fundamental data. See, what I say you is that if you don't want to revisit fundamental data again and again, what I personally do nowadays is that I go to the oilprice.com, and every day there will be 5 6 new articles. Okay, what I will do, some are very not. Mexico's mega refinery delayed, so that is not required for me. Overall supply demand, Mexico refinery delayed is not an important, but these editorials, okay. And Morgan Stanley jumps 100. uh, See, Morgan Stanley is today saying $100 bandwagon. Let me show you when I said it. Go to YouTube, okay, and Vivek Bajaj, Shododeep, crude oil.